Hello, my dear friends. I am your friend CA Karan Shade, and I will be teaching you GST. Okay, my dear friends. We are here to understand the CA final GST. Let's understand what it is. So, coming straight to the point, my dear friends, payment of tax very important chapter because it is an integral part of any, my dear friends. Okay, uh, big sum which is specifically with respect to 16 marks or a 10 marks. Okay, so starting with it, first we understand, my dear friends, manner of utilization of ITC. We start with manner of utilization of ITC. Now, when I say manner of utilization of ITC, in that case, please try and understand, my dear friends. What I'm trying to basically tell you is that, let's say, for example, if the credit period, if let's say, for example, you have ITC of IGST. Now, understand, you have ITC of IGST, you can use IGST to pay off IGST and also to pay off CGST and SGST. Okay, but understand the chronological order very will be something very uh, simple. First, you will pay off IGST liability, right? And then you can pay off CGST SG liability, right? So use the IGST credit to pay off first IGST liability, and if still remains, then pay off CGST and SGST liability in any order and in any proportion, right? But please make sure that out of the three credits you have, that is IGST, CGST, and SGST, the first credit that you think of actually exhausting is, my dear friends, nothing else but IGST. Is that very clear? Perfect. So once you exhaust IGST, my dear friends, once you exhaust IGST, my dear friends, the concept is very simple. The concept is very simple, right? You knock it off against IGST liability and CGST or SGST liability. But once you've exhausted that, you can then use CGST credit or SGST credit, right? So first ideally use CGST credit to pay off CGST liability. And if there is still any balance left, then use the CGST credit to pay off IGST liability. Is that very clear, my dear friends? Is that very clear? Clear? Yeah, yeah, perfect. Okay. And same goes with CGST. The credit of C will be used to pay off CGST liability, and the credit of C will then be used to pay off IGST, right? And same goes with SGST. First, you use it to pay off SGST, and then you use it to pay off IGST. But just make sure while you are using it to pay off IGST, while you are using it to pay off IGST, then in that case, please try and understand, that you've already used CGST credit. And only when CGST credit is exhausted, only when CGST credit is exhausted, will you ever think of using SGST to pay off IGST, right? So simple है. Okay, for example, if you have IGST, सॉरी अपना क्या था, हाँ, IGST liability and ITC of CGST and SGST, then in that case, understand, if IGST liability is 10 lakhs and CGST credit is, let's say, 11 lakhs and this is 10 lakhs. Now use CGST credit first and knock that off first. And then you think of SGST. So, for example, even if there is something like this, 8 lakhs and 8 lakhs. So use this first and knock this off. Then you have two remaining. Then you use this So 6 lakhs will be carried forward. Okay. You cannot use SGST credit to pay off IGST. You cannot use SGST credit to pay off IGST liability. To pay off IGST liability, if you have e-credit ledger balance of CGST. Is that very clear, my dear friends? Yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Okay, that's about it. Okay, so that is something that you really need to be very clear about. Okay, guys. Okay, that's it. And obviously, C credit cannot be utilized to pay off S liability, and S credit cannot be used to pay off C liability. Okay, they are both going in different pockets, so it's very important for you to understand that. Okay, and as I said, this is extremely important. The first line that is written here, and that needs to be taken into consideration. Yes. Okay. Next. Next, my dear friends, okay, once that you have understood the manner of utilization of ATC, the second thing, okay, that you really need to understand, my dear friends, is that of the fact that, okay, now what are these three ledgers? Okay, to understand these three ledgers are basically e-liability, e-credit, and e-cash. E-liability, e-credit, and e-cash. So e-liability, my dear friends, is basically the liability that supplier has to pay towards government. Now, first is the output tax liability. And if you pay the tax late, it is accompanied with interest, late fee, and penalty, right? Sorry, interest and penalty. And obviously, if you are paying the tax late, your return is also being filed late, which means eventually accompanied with what? Correct late fees. Okay. So, output tax, interest, late fee, penalty. First, you will pay for previous tax period. Then you will pay for current tax period. And then, okay, if there is any other tax liability that is raised by proper officer under 7374, you will pay the same, right? So in case your current tax period is May, first make sure that you pay for, okay, April. First April is paid, then May will be paid. Then let's say, for example, right, uh, if there is any tax liability that you are supposed to pay for the period of Jan, so you're supposed to pay 10 lakhs, but you only paid 8 lakhs. So a demand notice has got converted into demand order, and you are now supposed to pay 2 lakhs for January month, and that demand was raised in the month of, okay, May. Then you will pay the same tax, okay. After paying for April and May, you will pay the January wala shortfall wala tax. Is that very clear, my dear friends? Perfect. Next is e-credit, my dear friends. When it comes to e-credit, okay, the concept is very, very, very simple. E-credit basically, understand you need to follow this chronological order. Very important. Okay. Acha, next is, my dear friends, e-credit ledger, which needs to be understood very well. And it's extremely important, frankly. Okay. An e-credit ledger, my dear friends, represents ITC. Okay. E-credit ledger represents nothing but the ITC. Okay. Now, my dear friends, okay, also understand that e-credit ledger can be used only to pay off output tax. E-credit ledger can be used only to pay off output tax. Okay. So that means I actually imply two things here. Okay. Now that you have clearly, given it out in the market that ITC is used only to pay off output tax, that clearly means that ITC, okay, cannot be used, cannot be used to pay off late fees, interest, penalty, right? That means this will always be paid through e-cash ledger. Second, also understand I have said that input tax credit can be used only to pay off out tax. So for that matter, let's say in that case, I would again like to say that input tax credit, okay, cannot pay input tax liability as per RC. Okay. So remember that. So then what to do in case of input tax liability? Very simple. Okay. So for example, let's say if there is a HUL, right? And let's say it has taken service from GTA and GTA has opted for GST at the rate 5%. Rate is 1 lakh. In this case, understand what will HUL do? The first thing that he will do is pay input tax liability as per RCM in cash. In cash, yes, my dear friends, in cash. Okay. So one thing is for sure that his pocket has got emptied. He has borne the burden of input tax. But understand this input tax he has paid on inward supply that was in the course of furtherance of business. So definitely on this input tax, my dear friends, okay, that he has just recently paid, that is, let's say for example, in this case, 5,000. He deserves ITC. He can avail ITC. He deserves ITC. Yes, he can avail ITC. Hello, Leela. Hello. Hello. Okay. So he can avail ITC. And which is why what will he do? Okay, his e-credit ledger balance will be increased by 5,000. So let's say there was ITC of 1 lakh. Now the ITC will be reflected as 1 lakh 5,000. Because understand, irrespective of whether input tax that goes out of your pocket goes to the government via supplier, that is FCM, or directly to government, that is via RCM. RCM, FCM, RCM, FCM, RCM, FCM. Doesn't matter, doesn't matter, doesn't matter here. Doesn't matter, doesn't matter, doesn't matter here. Are you getting it? Yes. Okay. And which is why, my dear friends, you can avail ITC for the same. Okay. Perfect. So that is one thing that is definitely for sure that needs to be taken into consideration. Okay. That first you pay taxes per RCM and then you avail ITC for the same when it comes to input tax liability as per RCM. Okay. Perfect. Okay. So you deal with that. Okay. In this fashion. Right. Now we are done with e-credit ledger. Okay. We will now focus on e-cash ledger. So e-cash ledger, my dear friends, understand can be used to pay off anything and everything. Output tax, interest, late fee, penalty. Output tax, interest, late fee, penalty. Everything, everything. Badu. Are you getting it? Yes. Second, how will the money be transferred from the bank account to e-cash ledger? Very simple. Okay. NEFT, RTGS, debit card, credit card, net banking, UPI, IMPS. Okay. And the last is, my dear friends, cash check DD up to rupees 10,000 per tax period. Cash check DD up to rupees 10,000 per tax period. Okay. Per tax challan. Right. Now that is very important. Okay. But understand this limit will not be applicable to you if you are basically a proper officer who has unearthed a lot of cash, okay, either by selling of movable or immovable properties or by the way of collecting the amount by the way of cash check demand draft during any investigation or enforcement activity, right? And also, okay, to government department, okay. Is that very clear, my dear friends? Yes. Okay. So that is one thing that needs to be very clear. Okay. Yes, my dear friends. Yes. Okay. Next, only with respect to e-cash ledger, there is one more discussion that needs to be taken into consideration, friends. Okay. Now, in e-cash ledger, understand there are major heads, there are minor heads. There are major heads and the minor heads. Major heads are basically IGST, CGST, SGST, UTGST, cess. And minor heads are tax, interest, penalty, fee, others. Now, what used to happen initially was, okay, So if you want, I'll show you something, right? I'll show you something. So with respect to e-cash ledger, my dear friends, GST, PMT, okay, 09 form. Understand something like this pops out. Okay. Yeah. Something like this pops out. This is GST PMT 09 form. So initially what happened was, uh, if my balance is in, okay, CGST minor head and CGST major head and minor head of tax. CGST major head and minor head of tax. Understand, in that case what used to happen is that if I have some balance in that space, if I have some balance in that space, understand, I couldn't transfer it to CGST interest, CGST penalty, CGST fee. No, I can't. Or for that matter, SGST tax, SGST interest, SGST penalty. I cannot transfer any amount from major head or minor head to any another major head or minor head. Now that was a big limitation. And that was the limitation of the system, not of the law. So government then changed the IT portal and they created GST PMT 09 form. And because of that, now any amount in cash can be transferred to any amount in cash. Okay. Any amount in any major head of minor head can be transferred to any other major head of minor head. Okay. Absolutely. Without any hesitance, with full confidence. Is that very clear, my dear friends? Yes. That is so correct. Okay. And the next is, my dear friends, very, very, very simple. Okay. When it comes to e-cash ledger, okay, e-cash ledger balance. So, for example, if I had a branch in Maharashtra, I also had a branch in Gujarat. Now, let's say if I close down my branch in Maharashtra, okay, I had to refund the amount of e-cash ledger balance directly to my bank account, but now I can transfer it to my other branch account having the same PAN before closing it down, which will be useful to this branch because understand that branch is still existing. Gujarat wala branch is still existing. So it might need e-cash ledger today or tomorrow. So you can easily transfer from one branch to another, which was not possible before. But understand, before the transfer, make sure that Maharashtra branch has paid off all the liabilities and only then they will be allowed to transfer the balance from e-cash ledger of HUL Maharashtra to HUL Gujarat. Yes. Okay. Also, with respect to ITC, there is a very important discussion that pops out in Rule 86A, which says that government will not allow to debit any amount from e-credit ledger if they have a reason to believe that you have taken ITC from a supplier who is non-existent, from a recipient who himself is non-existent or is not carrying on business from the place that they have declared. You've taken ITC on the basis of invoice, but goods or service are not received. You have got the you have the goods and services are received, but you don't have the invoice. You have paid tax to the supplier, but supplier has not paid tax to the government, right? So if anything, any frankly, any situation, or for that matter, any case arises like this, it's very simple. Department will say debit, mat karo ITC. Okay. Don't let him debit the e-credit ledger. Okay. And every officer has a different authority to okay, disallow the debit. For example, with respect to assistant commissioner, deputy commissioner, amount not exceeding 1 crore. For example, with respect to additional commissioner, joint commissioner, 1 crore to 5 crore. For example, with respect to principal commissioner and commissioner, amount above 5 crores. Is that very clear, my dear friends? Yes, sir. Yes, sir. Yes, 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 sir. Yes, sir. Yes, sir. Yes, 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 sir. Okay, perfect. Okay. So this was respect to 86A. Okay, now we are left with 86B and something like this. Okay, before we go to 86B, I would just like you to, okay, go through this entire debit side and credit side. Understand this is very simple, frankly, and I'll tell you how. Why is this important? Because they keep asking, okay, write the debit side of e-credit ledger, write the credit side of e-cash ledger, whatever the case may be. Okay. How are you, CG, Aman, FF? All good, my dear friend. All the best. Okay. Now listen. When it comes to e-credit ledger, okay, just just one pro tip that I would like to give is focus on the fact that you are in the books of government. Focus on the fact that you are in the books of government, and this is basically, my dear friends, okay, the taxpayer's account. Okay, so you are in the books of government, and this is taxpayer's account. Now, understand what is incoming for me in incoming from me is outgoing for them, and what is outgoing for me is incoming for them. Okay. Now understand e-credit ledger. It's ITC. ITC is basically an amount that he's going to receive from the government, and which is why for government it's the amount payable to the taxpayer. Payable is credit balance, and which is why, okay, as soon as the ITC self-assessed, there will be credit balance in that, which soon will be debited with the output tax as soon as the person sells the goods. Okay, so it will be debited only with the output tax liability of obviously CSIU, whatever the case may be. In case of e-credit liability, understand it is the amount payable to government. So that in government's angle, it is the amount receivable from the taxpayer. So obviously it will be a debit balance. So amount payable towards output tax, late fee, interest, penalty, all my dear friends will be what? Debited. Now understand, my dear friends, that uh, that debit amount will soon get reduced day by day, okay, with the help of e-cash ledger and e-credit ledger. Okay, correct. So first it will be ITC and the remaining will be paid in cash. So through e-cash ledger. So through e-cash ledger you can debit, okay, tax, interest, late fee, penalty, everything. But through e-credit ledger, understand you will only be able to debit output tax. Okay. And the last is e-cash ledger. Understand, okay, the amount in e-cash ledger, government is supposed to pay that in case I ask for a refund. So it has to be a credit balance. So any deposit that I have made towards tax, interest, late fee, penalty via transfer of RTGS, NEFT, net banking, yeah, wo. Also the fact that when TDS and TCS is deducted by, let's say TDS by TDS deducted and TCS by ECU. Okay, and as soon as they, pay that amount on 10th of the next month, for tax, you understand very quickly, it gets reflected in my e-cash ledger. Okay, as that was an amount that I deserved, but they have deducted, they have paid, and then it will directly be shown in my e-cash ledger. Okay, and how will the e-cash ledger be reduced? Obviously, it will be used to knock off tax, interest, late fee, penalty. Is that very clear, my dear friends? Yes, sir. Yes. Okay, perfect. So that is, my dear friends, all the three: e-cash, e-credit, e-liability ledger, e-cash, e-liability, e-credit ledger. Okay, perfect. So that is that. Okay. Now there are only two things left, my dear friends. One is obviously Rule 86B, which has recently come, and second is the amendments that are in interest on delayed payment of consideration. Sorry, delayed payment of tax, my bad. Okay. But before I teach you this, okay, fatavat say I'll go have some water, come back, and definitely we will wrap up this, and then I will tell you a small story that might just land up inspiring you in any case. Okay. Thank you, guys. Okay. So now we are basically understanding Rule 86B. Okay. What is Rule 86B, my dear friends? Understand this. When I talk about Rule 86B, okay, what I mean is that there are two things involved here. Understand? Okay. There are two things involved here. One is that you have to check this in every month. So in every month, you have to check whether you have exceeded 50 lakhs or not. And what have you exceeded? Yes, you've exceeded taxable supplies or not. And taxable supplies will not include zero rated supplies and exempt supplies. Please make sure. Zero rated supplies, as you know, is basically supplies to SEZ and exports. So we are not talking about that. Okay. So exclude that and exempt supplies. So if you make that more than 50 lakhs, then we will talk about 86P. That is then is the only scope of triggering 86P. Now, in this case, understand government says that you will be okay able to utilize your e-credit ledger only to the extent of 99% of output tax liability, right? So you cannot use your entire ITC. No, 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 no. You can only use 99% of output tax. Sorry, 99% of ITC to pay off your output tax, right? So understand that if, for example, my output tax liability 100 lakhs ka 18% is 18 lakhs and my ITC balance is 20 lakhs. So though my ITC is more than my output tax, understand that I will be able to use only ITC of 99%, not 100%. So do you realize that you're actually in normal scenario if 86B wouldn't have applied? The answer would be nil. Output tax 18 lakhs, ITC 18 lakhs, nil, and 2 lakhs ITC would have got carried forward in the next tax period. But understand, here that will not happen. Here that will not happen. Here you will only use ITC to the extent of 99% of 18 lakhs, that is 17 lakh 82,000. 17 lakh 82,000. Got it? Correct. So now understand, my dear friends, that the e-cash ledger that you will have is only of 18,000. Is of only 18,000. Are you getting it? Yes. So always you will end up paying 1% of the output tax, okay, through e-cash ledger. Got it? Yes. Now understand, my dear friends, in this case, it's very important for you to understand that there are four cases where 86B does not apply, and clearly there is a very uh, big probability, very huge probability, I would say, that okay, all these four scenarios can be asked in the exam. Absolutely correct. Okay. So the first scenario is where the said person, okay, who's either a proprietor, karta, managing director, any of the two partners, whole-time members, members of managing committee, board of trustees, as the case may be, have paid more than 1 lakh as income tax in each of the last two financial years. Okay, in each of the last two financial years. Okay. Second, my dear friends, is very simple. Where the registered person has received a refund of more than 1 lakh in the preceding financial year on account of unutilized ITC in case of zero rated supplies and in case of inverted duty structure. So understand, either by the way of zero rated supplies, okay, or either by the way of inverted duty structure, the refund of the unutilized is more than 1 lakh in the preceding financial year. Okay. The third is a little tricky. I'll come to that. And the fourth is obviously if you are a registered person who's either registered by the way of government department, PSU, local authority, or statutory body, right? So even though your taxable supplies exceed more than 50 lakhs in a month, Rule 86B not applicable to you. Rule 86B not applicable to you. Okay, correct. Now, the fourth case, my dear friends, happens to be where a registered person pays output tax through e-cash ledger in excess of 1% of the total output tax liability, okay, up to the said month cumulatively. Okay. So output tax liability is repeated twice here. Just cancel it once. Now, what does that mean? Now, I have actually given an example out here. So, let's say the taxable supplies out here for the month of April, May, June, correct? So, for the month of April, my dear friends, here, understand that the taxable supplies out here is very simple. Okay, it is 10 lakhs, 20 lakhs, 30 lakhs, right? And उसपे GST is 10%. So that will be 1 lakh, 2 lakh, 6 lakhs, right? And the balance in the credit ledger is 30,000, 1 lakh 70 and 7 lakhs. Okay. So let's say here the output tax is 1 lakh, 2 lakh, 6 lakh. Perfect. ITC happens to be 30,000. So obviously the amount payable through e-cash ledger will be 70,000. Here it's 2 lakhs minus 1 lakh 70, 30,000. Okay. And here it is 6 lakhs. Also understand that out of these 3 months, okay, क्या अप्रैल में 86 भी अप्लाई होगा? विल 86 भी अप्लाई इन द मंथ ऑफ अप्रैल? नो 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 नो, नॉट applicable. May 86 be applicable? No, 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 not applicable. Why not applicable? Because obviously it is not exceeding 50 lakhs in terms of taxable supplies. In June, it can or cannot be applicable. I don't know. I'm putting a question mark. Okay. Let's see. Okay. Depending on that only, I will take the position of ITC. Okay. Now, what do I have to compare? Okay. So I have to compare the output tax that I have payable through e-cash. Okay, up to the said financial year, right? So up to June, from April to June, I have paid 1 lakh as e-cash. Now, what is 1% of the output tax payable up to the month? Okay, so output tax payable up to the month is 1 lakh, 2 lakh, 6 lakh. That is okay, 9 lakh. Okay, there is a small error here. It's 1 lakh, 2 lakh, 6 lakhs. So that is 9 lakh, and 9 lakh ka 1%, my dear friends, okay, happens to be 9,000. So is 1 lakh more than 9,000? Yes. In that case, I have paid enough tax through e-cash ledger, right? And which is why in this case, I will be covered under, okay, 86. I will be covered under the exception of 86B, and hence 86B shall not apply. And which is why my output tax is 6 lakhs. My ITC will also be 99% or 100%. 100% I can use it, and thereby that will amount to nil tax liability. Is that very clear, my dear friends? Yes, sir. Okay. And also the fact that, yeah, correct. Okay. So ITC that is used is how much? 6 lakhs, correct? And I have 7 lakhs as ITC, right? Then obviously 1 lakh will be carried forward in the next tax period. I hope this is very, very, very clear, my dear friends. I hope this makes sense. Okay. Perfect hai, perfect hai, perfect hai. Okay. Next, my dear friends, is with respect to this. Correct. Interest on delayed payment of tax value. Now understand. Whenever you want to compute interest, it happens in, okay. Very simple. There has to be value, rate, and period, right? Which will be obviously in days. Okay. So if you have all the three data, you can easily figure out what is the interest tax liability payable. What is the interest tax liability payable? Okay, perfect. Now, my dear friends, what happens is very, very, very simple. Where will I get the value? I will get the value from here. Okay, it can be either net basis or gross basis. Now, what do you mean by net basis? Net basis, my dear friends, is very simple. It says that listen, if there is a delay in filing of tax due to delay in filing of return, right? If there is delay in paying of tax due to delay in filing return. So April was the tax period. I was supposed to file GST R3B for that on 20th May, but instead of filing on 20th May, okay, correct, I have filed it on 20th July. Instead of filing on 20th May, I filed it on 20th July. So have I filed a delayed return? Yes, sir. Have I filed a delayed return? Yes, sir. Achha, which is why, because of that, have I also paid delayed tax? Yes, sir. In that case, government says, since you have not filed the return itself, please file the return. Okay. Document all your output tax, document all your ITC, reduce it, and the net amount will be payable in cash. Is that very clear? Yes. So the interest will thereby also be payable on the net amount, which is nothing else but 18%. And 18% is the standardized interest rate. Understand, my dear friends, that initially there were two interest rates. One is 18, one is 24, one is 18, one is 24. But simple. Okay, now there is only 18%. Okay. Acha, what is second gross basis amount that is unpaid? Very simple. When there is delay in payment of tax due to mistake of either the supplier and he points out it himself, or because it's actually got pointed out by whom? By the proper officer, right? Now, how does that happen? Very simple. Understand. Um Understand very clearly actually that, let's say for example, for the month of January, I was supposed to file return on 20th Feb, and I filed it on 20th Feb, but I was supposed to pay 10 lakhs, but instead of 10 lakhs I've only paid 8 lakhs. Now I get a demand order from proper officer under 73 74 in the month of December that, listen, this is the January liability that you were supposed to pay 10 lakhs, but you have paid 8 lakhs. Now, in that case, the unpaid amount is 2 lakhs. So, on 2 lakhs, I will be paying interest 18% for whatever period it is. Right? Correct. Okay. That is. So, that is one part. Okay. So, here the value is sorted, rate of interest 18% is sorted, and period will be obviously whatever the tax period it relates to. Okay. You will start the counting from 21st, okay, of the next month. So let's say that supply was supposed to be done in January. 21st February is where you start counting it from, and then you will start taking it, okay, and pay it, okay. Very simple. Correct. Okay. To the time when you paid back, okay. So from 21st of February to back when you paid back to the government. So till that period, you will calculate interest. Okay. Now there is a very different angle that finally pans out, and that is with respect to ITC. So understand that ITC has been wrongly availed and utilized. Okay. Understand that ITC has been wrongly availed and utilized. Okay. Now it is very pertinent to note and understand that what does this basically talk about? Listen, when balance in e-credit ledger falls below the, okay, ITC wrongly availed balance, the extent of such ITC utilization only, okay, will be subject to interest. Okay, let's understand what it's trying to say. So, for example, for the month of April, okay, the eligible ITC had was 7 lakhs. ITC wrongly availed was 50,000. So the total ITC had was 7.5 lakhs. Now, output tax liability lands up to be 7 lakhs. So the balance in e-credit ledger is 50,000, which is exactly the amount of ITC that is wrongly availed but not utilized. Wrongly availed but not utilized. Okay. So when will I utilize this? Okay, it will be considered as utilized only when the balance in the e-credit ledger dips below the ITC that you wrongly availed, right? So as soon as it dips below 50,000, understand, to that extent you have utilized the ITC. Okay, in the month of May again, your ITC carried forward balance is 50,000. Your eligible ITC is 5 lakhs. 5.5 lakhs is the total ITC. Output tax is again 5 lakhs. 50,000 is again a balance. Again, wrongly availed ITC was how much? 50. Your balance is still how much? 50. It has not dipped. Okay. Next, opening balance in credit ledger is 50,000. Eligible ITC is 3 lakhs. Now total ITC is 3.5 lakhs. Okay. Output tax liability will be how much? 3.3 lakhs. Do you understand that actually the wrongly availed ITC is 50,000? The wrongly availed ITC is 50,000. Correct. The wrongly availed ITC is 50,000. And you have just utilized how much? So the wrongly available ITC was 50,000. The balance that is now available is 20. So that clearly means you have used 30,000, and which is why now interest will start living on 30,000. Correct. Okay, July, you have 20,000 carry forward, 6 lakhs is your eligible ITC, total ITC 6.2. 6.2 is your liability. Now there is no ITC in your e-credit ledger and the non-level ITC is 50,000. Now 30,000 is only, okay, an amount on which interest is levied. 20,000 will also be an amount on which interest will be levied, my dear friends, because it is now wrongly utilized. Okay, correct. Acha, from which date will it be? Will the interest start? The interest starts from the due date of filing return or actual date of filing return, whichever is earlier. So due date is 20th July. Okay, for this case, for June month it's 20th July or 21st July, whichever is earlier. So that happens to be 20th July. Okay, so please understand in this case that date of utilization will be considered as due date of filing return or actual date, whichever is earlier. Clearly, when the return is filed, but when understand, okay, there is other case. So I've not filed return, but I have wrongly utilized ITC and department tells me that through a demand order. In that case, okay, it's very important to understand that since I have not filed a return, there will not be a due date, okay, of filing return or actual filing of return. Correct? With respect to that. And which is why in that case, please try and understand that the date of debit in e-credit ledger when the balance in e-credit ledger falls below the amount of wrongly ITC availed will make sense. And you will take the date of debit, okay, in the e-credit ledger as the date, as the relevant date from where interest starts. Okay. That's it, my dear friends. That's it. We are done with payment of tax. I hope this entire session made a lot of sense. Okay. And yeah, I hope this makes sense, guys. I hope this makes sense. Correct? Absolutely, absolutely, absolutely. Done. ठीक है? Done.